A property market analysis is the study of the current market situation and trends. And this is very helpful for you to know so you know what's happening with your property and the property market in general. Now, if you're watching this video, that means you must be interested in property one way, shape or form, whether it's commercial, housing, residential. A market analysis is fantastic and essential no matter what property strategy you are utilizing. If you are interested in property, then watch this video. You will get a lot of information and I'm hoping it will help. If not you, then at least one other person on this channel. Now, spring is almost over and we are nearing summer. We got spring in the rearview mirror, and I tell you one thing, I am looking for the summer, but it does beg for us to have a look at the market and see what's happening. If you are hoping to invest, whether it be buy to let, rent to rent, new builds, just purchasing land and holding, is an essential element of looking at what's happening in the market. We are 6 months down the line from January. Can you believe it? I couldn't even believe it myself, but here we are. So most recently, rent reforms have been huge, with England and Wales changing the way that they rent. These rent reforms have been some of the biggest changes in over 30 years, with Wales being the first to make their changes. On the 1st of December 2022, we saw the housing market change as the rent reforms in Wales specifically came into force, with landlords having to change the way they rent property with the aim to improve how they rent, manage and live in rented homes. Some of these changes include the names of tenants and the actual names of the contracts themselves. They've also changed the notice period and also given a clear criteria of how to know when a home is habitable or not. With these changes, there are multiple benefits for both landlord and tenants. It ensures that homes are fit for human habitation. There's more of a simple system to work with. Abandoned properties can be repossessed earlier. And for tenants, landlords have to give a longer notice period, meaning you as a tenant get more time to find a new home, which we all know is essential because when you give a 1 month's notice, sometimes you cannot find property within a month, especially with how the property market has been for people who are renting. Trying to find the right property in a short space of time is challenging. Prices have gone up and affordability has not necessarily gone up with that. So the government recently introduced the Renters Reform Bill to Parliament on the 17th of May 2023 with the aim to deliver a safer, fairer and better quality home for the end user. The renter. I'm pointing at you like you're the renter, but the renter. MPs will now be debating over this bill and seeing whether or not they will be going ahead with it. I think there's an opportunity for other people to have their input, but do not quote me on that. Don't quote me on that. Some of these changes will include doubling the noticed period and also being able to include pets in tenancies. Also, there'll be changes around section 21, the no fault eviction to be completely abolished, and the creation of a new ombudsman to cover all private landlords in the housing sector, which I would have thought we had that already with TPO, the property ombudsman, and with the property redress scheme, because they are there to manage complaints and see them through to the end if they can't be resolved within the sector itself. So I'm not too sure why there would now be another one. And the question would be for me is, are these mandatory ombudsmen that you would have to register to, like it's supposed to be with this one? It is a mandatory thing to be registered to an ombudsman if you're a property professional of some sort, or some kind of redress schemes to make sure that complaints are handled. They are somewhat like I wouldn't say they're a governing body, but they're somewhat similar to that. But is this going to be something that's essential? So that would be interesting to see what happens in the near future with that. Now, there are 4.61 million homes rented in the UK from a whopping 2 million landlords, which is a lot to manage. So there is going to be some form of structure because they want to get a handle on all of this. There are a lot of bad landlords, there's a lot of rogue landlords, and they want to get on top of it, but nowhere near as many as the good ones. So why are they making the good ones suffer? I don't know, but this is stuff to take into consideration when you are looking around at what strategy, what to do in the property market. How is the property market? This is where we're at. We have 2 million landlords landlords renting to 4.61 million, and with property prices going up so much, there will be more renters, people renting homes from private landlords. The question is, who will be the one renting the homes to them? Will it be you? Will it be your neighbour? Or will it be the government themselves? Well, we know it's not the government because they're not building as many houses as they need. We'll have a look at that shortly. These legislative changes where more requirements and restrictions are being imposed on landlords, those who do not have an economy of scale where there's multiple properties, means that it will be very challenging for that small landlord. Why? Because with these changes, more costs are imposed on the landlord. And these additional costs can potentially put them out of the market. The government says that these changes will put rogue landlords out of the market, but I believe this to be very untrue. Because think about it, if a landlord's going to be rogue, he's going to be doing it anyway. He's not going to be worrying about a new law that came into place. They'll still be making their own rules and follow and abiding by their own economy. It will not be impacting them at all. Why do I say that? Why do I say that it won't be putting rogue landlords out of business? Well, we already have things that we have to abide by. We already have 10-year EPCs. We already have 5-year electric certificates. We already have 1-year gas certificates that have to be updated. Insurance. These things already have to be done on an annual basis. Now, if a landlord is not following that, putting in new laws where you have to change the name of a tenancy and change the name of what you call the contract holder, it wouldn't make a difference because they already don't follow the rules. Why would now one single change make them do so? So if anything, it's going to go even more in the opposite direction and just remove a lot of smaller landlords from the market, which I believe maybe that's what they're already trying to do, is remove the smaller market so the bigger boys can come in and hold more stock. That could be potential, but who will be the ones missing out? Who will be the ones suffering? Will be for the renters to decide. Now, with what's expected of a landlord, you would need to stress test before you buy, and obviously you would have done that before, but now would be essential because there are going to be costs that you have to take into consideration that may have not been there before. Now, with the existing residential housing stock, 63% of houses are homeowner occupied. So that means there's still a whopping 37% more that are being rented to people like me and like you. And that means there is room in the market for more people to be coming in on a buy-to-let basis, but also a huge market for the homeowner occupiers, because 63%, quite a good number. It's low in comparison to some areas where up north in some areas, some regions, a whopping 80% of that particular area is homeowner occupier. Now that would change as you go throughout the UK. Some will be predominantly renting, some will be predominantly households, but that's a good driving factor as to where you should be looking to do your flips, looking to do your service accommodation, looking to do your rent to rents, because these things will be taken into consideration. Okay, but currently that's where we stand, that 63% of the housing stock are homeowners. The government encourages new home ownerships and have a number of incentives to get people onto the housing ladder. As well as that, they have a goal to build 300,000 homes a year, and unfortunately they're not hitting that goal. So they have a lot of incentives to incentivize you to look into buying property and get buying. They are huge cheerleaders of property and want people to be owning their own homes as much as possible. So they have a number of incentives. You can buy your council place or your housing association place. You can hear my baby boy in the background because he's awake and he's talking to his toys. So please bear with us. But also getting a loan to purchase a new build home. So they have loans for that. They have shared home ownership loans where you'd be buying only a fraction of the property. And they also have self-build loans which are for first-time buyers. So that really does tell you, and most of that is for first-time buyers. I think all of it is actually. That is just to tell you that they want people owning their own homes. They want you to be borrowing as much money as possible, and they are all for that. Now, a lot of tenants will be in the gap of that because a lot of people don't want to have to share their home that they own. They also don't want to have new builds. Some people like traditional properties. In fact, most people like traditional properties for many various reasons, and therefore some of those loans won't be attractive. But there are other products on the market which are fantastic for first-time buyers, where they can borrow up to 95% of the value and only put down a 5% deposit, or they can put down nothing and take out 100% loan to value, where you borrow all the money to purchase the home. Those aren't so popular, and they do come with stricter requirements, but those products are on the market. Now, it does beg to make me wonder, back in the day, was it when MX was around, right? And people can purchase a property and still get 25% more on top of that as a loan, which will be all wrapped up into your mortgage, and borrow money like that. Now, that seems to be, I wouldn't say coming back, but 100% mortgage is not far behind from that. And that's quite interesting, because when you look at what was happening at the time, there was a lot of sales going on. They had a lot of products going out, meaning credit products, loans going out, short and long, and short-term and long-term loans. And then you had the financial hit. There was too much borrowing going on. With us coming out of COVID, where a lot of people were furloughed, and that meant businesses still having to pay a certain amount of percentage of wages, which is 8%, 80% or 70% of wages. That's a huge amount to have to pay out when you're not bringing the money in. That means people were borrowing. And then you had the government giving out the subsidiary for the remainder amount. I could be saying these words wrong, but you got to bear with me. This is what they say. This is what they say. The baby brain is. I got it. Okay. Now, with those 100% mortgages, you do need a guarantor for those. So whoever's going to be helping you get that mortgage, because someone's going to have to stand behind you or next to you within the application, so they can borrow that money on the basis that should this fail, we can come after Bob or Sam. They will also have to provide some form of security. So they will have to own their own property also. Other things people can consider if they're not able to get on the property market using the above shared ownership home loans and all of that, self-build loans and all of that, is doing family offset mortgages as well as family link mortgages, which are quite interesting. And I hadn't heard about that before doing some new research on the market. So there seems to be a lot of products that are available. You do just have to tap into them and have somewhat of some form of savings behind you. I'd say at least 5%, but then these mortgages do come with interest rates that can be quite high, and as well as that, you would have a certain payback period. So you'd be looking at a 15 to 30 year payback period. If you are on the older end of that, would you be able to get these products? I don't know. You'd have to speak to a broker, but there are products available, which shows you in the market today there is still interest, right? There is still interest. They still want to help people get onto the property ladder, and the government have helped with those incentives. Now, with mortgages come interest rates. In 2009, interest rates were cut sharply and remain historically low. Interest rates, it impacts everybody, whether you're rich, you're poor, you employed, you self-employed, you unemployed, you're single or you're in a family. Everyone is impacted because everyone spends money. Mortgages are one of the biggest expenses people take out over their lifetime, and interest rates will impact the amount you pay. Likewise, spending on credit cards and short-term loans, they will equally impact you just as much, and if not more, because interest rates around those facilities can be quite high and therefore be costly and expensive. If you're borrowing with high or low interest rates, this will impact the housing market because it determines the amount that you pay and therefore affect affordability. Many people rely on interest payments from the bank to provide income, so whether you are a saver or a borrower, the level of interest will impact you. My baby's in the background and he is just awake and in full vocal swing. That's my baby. So if you hear him, he's just with us. He's just with us. Aren't you, baby? He's just so scrumptious. The bank rate is the single most important and impactful interest rate set in the UK because all lenders use the bank rate as a basis to set their rates. The Monetary Policy Committee set the bank rate, and this bank rate is set to meet the target the government set to keep inflation low and stable. Bank lenders don't always set their rates as the same amount as the bank rate. And interest rates might change for other reasons too. Banks constantly need to make money, so they may charge more in interest than they actually pay out to savers. So if you're a lender and you're borrowing money from the bank, they're going to charge you more interest than those that they would actually pay to those who are saving their money in the bank, using it, which is the money, you know, they're using their cash. This money in the bank that you're saving, they're using that money to then go and lend out for Bob to take his mortgage out. Today, the bank rate is, I'm recording this in June. A change in this rate will affect the amount people spend, and how much people spend influences how much things cost. So the bank rate influences prices and inflation. So if you have a mortgage and your interest rates fall, your mortgage interest might get cheaper. Your payments might get cheaper. Likewise, if these interest payments fall, businesses and households will borrow more money. So currently the bank rate is, and the last time it was like this was in 2008. That's 15 years ago. These rates fell from the remainder of 2008 into 2009 from 5% to 0.5% in March of 2009, which is actually only over a 6-month period, which, by the way, is quite quick, right? Over 6 months, interest rate went down over 5%. But then again, just looking back at the last couple of months ourselves, from September, they've increased quite considerably, and that's just from September gone. So these rates do go up and go down quite quickly. Something to be aware of. We're operating in a market at the moment where interest rates, they're not solid like they were, you know, for the past how many years. They've been solid. We've lost that stability now, and now you're seeing an increase in rates again, which is something to be aware of when you're thinking about investing in property. Again, this is why stress testing property is so important. When you're stress testing, you're going up to the max. You're seeing, right, okay, how much can I go up before this becomes not profitable for me anymore, before I stop making money? So when you're stress testing, you're looking at 2 times the rental income, 3 times the rental income, 4 times the rental income. How far can I go with this property before it becomes a complete no-no and it's time to throw it away? Now, when the fixed rate period finishes and then you go into that variable period within the mortgage, this can be a very tricky time because interest rates can actually double within that period of time. You can go from paying 4% to 8% overnight, 3% to 6% overnight, and suddenly your cash flow is looking a whole lot different. So this is the time that we are operating in at the moment. It's wise, if you're coming to the end of a fixed rate period within that next year, start looking at interest rates, and then as you round up to at least the last 4 months, start looking at what's happening with a decision to be made within 2 months before you run out, so your application period can go smoothly. Your broker might want you to wait longer than that. It depends on what advice they give you, but it's a good time to be looking, particularly if you're coming up to that period right now where you're ending your fixed rate, going into variable. You don't want that payment to double, because I'm sure it will, because 5 years ago mortgages were looking good. Even 2 years ago mortgages were different. So now is that time with the interest rates as high as they are. We don't want financial burdens, and this is why we are looking at the housing market. Remember that. So since 2009, the bank base rate has stayed below 1% up until May 2022, which is the end of the pandemic, when things started going back to normal. From there onwards, right, so since May 2022, interest rates have been going up slowly, up until what it is today. So with bank rates still relatively low, considering how high they've gone up in the past, 15%, right? It's still relatively low, and that implies that, you know, spending is still encouraged. They're still encouraging people to go out and take out loans, keep borrowing, because the interest rates are fairly low. When you start hitting those high numbers, that's when you need to be a bit more concerned, and that's a slight different conversation. Rents have increased also. So with these costs increasing from an interest rate perspective, interest rates going up, loans going up, the cost of loans going up, rents have also gone up. in line with the market. So those of you who are doing that buy to let structure, that buy to rent model, there's still an increase in rent. So when you are purchasing, you are still going to be doing your stress test, but making sure that when you are looking at properties, you want to be doing up-to-date research, not just based on what you knew from 3 months ago, from 6 months ago, because the market does look quite different within a short period of time, a short space of time. So doing that research and understanding what is available at the moment and what type of rentals you can get in is just a huge importance. The government's target to build 300,000 homes has never been met. And therefore it falls on the private rented sector to provide the rest of these housing that people need to be able to somewhat hit their own targets. It's almost like working in a partnership, and that's how that's going to be. Now, you would think they would want to help landlords, right? You'd think they'd want to help people get into the market and help them reach and achieve their own targets, but nope. I think they're relying heavily just more on house association and those bigger landlords, and just trying to get the small ones out to stop the market being operated in a rogue manner. And of course, not only does it help meet their demands, but it alleviates the costs on the local boroughs, because these local boroughs, they are responsible for creating and providing homes for their residents, so their residencies, the people who live in the areas. So, you know, working with private landlords does help solve that issue. In 2010, house building figures reached their absolute lowest of 135,000 homes in 1946. This low completion rate, it has continued to put pressure on the UK's supply as...
Foxy man!
I'm almost done. I kind of want to finish this.
Sorry, you can't put me putting a hug in. Just say like, ready. What are you gonna do? What are you gonna do? Listen, I'm gonna walk in and say good night, mum. And you're gonna say, oh, sorry, my son's just coming to say good night.
Okay.
That's what they do. I noticed they do that quite a lot because like shows that your family orientated in your family.
So the population, as the population's increasing, oh, you're going off to bed. Good night, my darling. Have a good sleep. So like this. Are you actually off to bed now then? Yeah. Are you hungry? You're hungry? What are you gonna do?
I'm eating all day.
Are you gonna have a snack? A bedtime snack? I bought more peaches. Ooh. I bought more peaches in the fridge.
Just doing my chemistry revision.
You've been doing your chemistry revision? Well done. How's it going? You feeling confident about it?
It's easy, the parts I know, because it's like it's mostly maths, so it's like, and I kind of get maths. However, they're giving me words that I've never heard, and the reason is because, the reason why is because they're in step 1, they use a lot more words. They use a lot more different ones, so I don't know what isotopy is. But when I look it up, they're saying it's like more than one. It's more than one atom that have like a relative atomic mass. But then they explain atomic mass. They're using a different definition. So I'm like, well, in order for me to understand one, you gotta like understand it without using a different one that I don't know. So they're describing something with another word I don't know. So I'm just asking everyone else what are you looking outside at? Looking at? What are you looking at?
This low completion rate has created huge pressures on supply because the population has continued to grow. However, most recently in 2019 and 2020, they have built a lot more homes, 244,770 homes. So that's good, that's a huge increase. But again, it's still under, and that means there's still room in the market to provide housing by other means, which is where you come in. But that coupled with when you provide this housing, what's the interest rate looking like? What does that look like for the specific area that you're looking in? And what's the rental demand? And, you know, is it good for me to enter the market right now based on today's situation? These are the type of questions you're asking yourself as you're looking at this information, as you're analysing this information, as you're finding out where we are. Now, this increase in demand can increase house prices. So after that hit in 2008, property prices drop. A lot of people lose their homes. In 2010 up until 2020, house prices have actually been on a steady increase, which is nice. So we've been on a projection for the last 15 years or so, and which is good. But we do know that every 20 years or so there is a market drop. 20 to 30 years. So there is a market drop. So again, you know, when you're looking at predictors and people who are saying the market's going to go down, this year is going to be a crazy year, part of it is kind of like a bit of a guess, and some of it is based on factual information. So if you look at your own factual information, you can come to your own conclusions, but look at history as well, because looking at the present, the past can determine the present. Some of these increases that happened between 2010 to 2020 was up to 48%, depending on the area that you're in, of course. Some up to 63%. So demand is higher in areas with higher price rises, and they have the highest economic output due to the job availability and earning potential. The influence in increased house prices can also be the relaxing of that stamp duty, where they had a stamp duty holiday, and that meant people could pay a little bit more for their properties. I believe those of you looking to invest in property can be encouraged by the continued growth in the housing market. There's a shortage of available homes, and therefore properties for rent and properties to purchase are still in demand, and therefore seem to be a desirable investment. Ultimately, demand is still high, property prices are still quite well, and you'll find that there's been an increase in property prices. They still are going up. Rental markets are going up, but so is inflation, and therefore interest rates are also going up. Not the inflation is not going up because interest rates, but you know, interest rates are also going up. So everything is on the increase. But as long as you can have a balancing act and you're looking at an investment area that makes sense, whether it be service accommodation, whatever strategy you're using, it just needs to make sense. The property market is still strong. There's been a lot of legal changes, and therefore you need to make sure that your investment is strong. It can withstand any more knocking at the door financially, because I tell you, things are getting pricey and it's becoming more and more costly to manage an investment, and you need to determine whether or not it's worthwhile for you, and if it is, move ahead, and if it's not, you don't, and consider other strategies. Again, the property market is like any other industry, because prices go up, prices go down. It's a product you're buying, you're selling. There's a lot of other influences. These have a lot of varied interests as well, a lot of varied influences, but a lot nonetheless, and you need to look at all the moving parts and decide whether or not it's good for you. I hope this video has allowed you to look at the market as a whole. I hope this video has educated you in one way, shape or another. It's allowed you to see what's currently going on in the market, and then come to your own conclusion on whether you think it's good to move forward or not. Sub areas, like when I say sub areas, I mean individual boroughs, local boroughs, they will have their own rules and regulations. So if you're considering of doing HMOs as a buy, as a purchase, or HMOs as a rent to rent, you still need to look at what's happening in that area, what those legalities are, and me seeing out those legalities financially, is it feasible? Those are the questions you need to make sense of, and what does the rental market look like right now in that particular area. But as a whole, the market for me is still looking strong. Interest rates are still fairly low, but you know, mortgages are doable, but that's for you to determine based on your own personal situation. Make sure you look at that. Don't bypass that. Don't take this as a blanket, because it's not a blanket. But I hope everything you do is successful. I wish you all the best. Remember, connect, make connections in property, because that's really how you make good friends, support groups, peers, and meet professionals, and do business together. I look forward to seeing you in another video. Make sure you like and subscribe if you think this video was super, and I can't wait to speak to you again in another video. Take care. Bye.